If you want the best selection of homes, you are usually going to be paying a little bit of a higher price based on the fact that the selection of homes, the highest selection of homes tends to be in the spring market, and that's usually when prices are the highest. But if you are someone who is price sensitive and you are looking at potentially getting a discount, and you don't care as much about the selection of homes, then July and August tends to be a really great time to look because prices oftentimes pull back. And so we're not going to see as many listings on the market. But if you're a little bit more flexible with what you can purchase, you care more about the price, this is for you.
Hi, welcome back to the Canadian Real Estate Channel. My name is Luis Rivas. I'm a real estate investor and coach. I am out of the Ottawa area, and today we have the pleasure of welcoming back Emma Pache back to the channel.
Love it.
Emma, what's shaking? Toronto.
The fact that you said my last name appropriately just makes me so happy.
I had one job to do, and I nailed it.
You nailed it for sure. It's actually funny that you said that, going a little bit off script. I've been doing some more sales training for agents. And one of the things that we tell them to do, especially in the GTA, because there's so many ethnicities and cultures, etc., we tell them to pull up pronouncenames.com. And while they're making calls, so because everybody loves it when you say that if you have a difficult name, my name's not difficult, but nobody knows how it's actually said. So everyone calls me Pace. But when someone says it appropriately, Pace, I'm like, something different, right? So,
and if you're Italian, your name means something very, very special.
It does,
I don't know if we should say it or if we just get people to go and Google.
I think let's leave the open loop and see if it comes back sometime later in the conversation.
Okay, let's do it.
I like it.
All right, Emma. So what's up? What's new and exciting?
You know what? The Toronto summer slowdown is real, is what I would say. Okay. That's kind of a good name or good theme for, what I've seen happen. And it's been a couple months. We were on a little bit of a hiatus on the channel. So I think a little bit of catch up to do, which we'll talk about today. And then, just talk a little bit about what's been going on and maybe what we think is going to happen in the next couple of months, so people can make some plans and prepare going forward. If I'm correct, so there's no guarantees, but I'll just give you my thoughts.
No pressure.
Awesome. Well, I'm ready to pull up my slides and let's kind of hop right into it. So for those of you that have seen me on the channel, I've been on this channel more times than I can count at this point in time. So if you're new,
years now, eh?
It's been almost 3 years, which is pretty wild. So I've been tracking the data for a long time, but I typically like to hop into these presentations talking a little bit about year over year and month over month performance, just so we have a little bit of context as to how we're doing. So we'll start with month over month, and so this month we're looking at June data. We'll have the July data very soon, but it's very common to see from May to June prices drop, right? So you'll see in a couple of slides from now, but oftentimes throughout the course of the year, from a seasonality perspective, May tends to be the highest priced month. There tends to be quite a bit of inventory. So, a good kind of moral of the story or a good theme for today's conversation is if you want the best selection of homes, you are usually going to be paying a little bit of a higher price based on the fact that the selection of homes, the highest selection of homes tends to be in the spring market, and that's usually when prices are the highest. But if you are someone who is price sensitive and you are looking at potentially getting a discount, and you don't care as much about the selection of homes, then July and August tends to be a really great time to look because prices oftentimes pull back. And so we're not going to see as many listings on the market. But if you're a little bit more flexible with what you can purchase, you care more about the price, this is for you.
That's
right?
the golden nugget right there, guys.
There you go. Yeah. So from May to June, we saw prices slide a little bit. Now we're focusing specifically on the Toronto market. We'll look at the suburban markets in a second of the GTA. But condo prices went down just shy of 2%. So we went from about 785 average purchase price to 770. So yeah, 2%. Not. I mean, when you look at it, it's about 14 grand. Not a massive amount of movement. Condo townhouses went down from 928 to just shy of 900. So about 4%. That said, there's not a whole heck of a lot of volume for condo townhouses. When you compare condo prices or detached prices, there just isn't as much movement, like inventory turnover. So something to be said for that. Semis were pretty flat. We're basically hovering in and around the 1.2 mark. And then detached properties, biggest move to the downside from 1.9 to basically 1.8. My personal kind of thought process on this is, if you look at that, we're looking at, I don't know, 150 grand or so. And so with current interest rates, that makes a pretty big difference in your borrowing costs. And
Mhm.
so entry level price points tend to be a little bit stickier in today's market where there tends to be a little bit more volatility. Whereas I'm finding that the higher price properties are having a little bit more fluctuation because, you know, when you're talking about carrying $2 million at current interest rates, it's not an insignificant amount of money to spend every month on the borrowing costs. So this is a $14,000 spread is a little bit more palatable than 200,000 borrowed at 6% or whatever that happens to be.
Fair enough.
Yeah, so that's kind of what we're seeing on the on the Toronto side of things, and then we'll look at the suburban regions of the GTA. They were a little bit more resilient actually in June than Toronto was. So Durham, been tracking this Durham number for a while. I thought this month would have been the month where we saw the $1 million price point again in Durham, but we stopped $1,000 shy. So
Oh,
we're about $1 million to get into Durham region. We went up 1%, so from 988 to about $1 million 999. Peel was flat. We're at about 1.14. Halton, we're at about 1.3, so we went up about 1.5% or so. So 1.27 to 1.29. So you're looking at about 1.3 to get into Halton. When we take into consideration everything that we saw here, that equates down to about almost a 4% price reduction month over month in Toronto. So from basically 1.2 to 1.15. And then York region tended to be relatively flat again. So from 1.37 to basically 1.4. So the suburban markets look to have been a little bit more resilient than the Toronto market over the last little while. But for me, what I think is pretty interesting is I've been tracking, peak prices, so Feb 2022 for most markets to now. And we were consistently seeing across the board, if we looked at the percentage price reduction, it was in the 20s kind of across the board for the longest time. And at this point, we don't actually have one of the 5 suburban markets that I've been tracking that has a 20 in there. So the good news is the deficit or the pullback that we've seen as a result of the interest rate hikes, the gap is kind of closing a little bit. But we're still off the peak of the market for all 5 of the suburban markets right now. So Durham's down about 19%, Peel's down about 13%, Halton 15%, Toronto about 5%, and then York is about 11%.
and these numbers that you talk about in this slide and the previous one,
Mhm.
it's cumulative, right? It's all semis,
Composite, exactly.
condos, singles, etc.
Yep. Yeah. So they're composite. So I like to break down Toronto because that's where the bulk of our clientele is. The bulk of our clientele right now were um, condo owners that have now grown into their condos and are selling their condos and then moving to the suburban market. So I like to track both. But Toronto, I break down a little bit more granularly, and then I still like to compare Toronto against the rest of the suburban markets, just so our internal database has an idea of kind of what's going on out there. But if you guys are interested in more micro data, just get in contact with us. My team would be happy to get you these numbers specifically in Durham, Peel, Halton, or York.
Sweet, sweet.
Yeah. And then if I like to also look at things from several time horizons because I think if you look at this, you're like, wow, it's still pretty doom and gloom out here. But if we look at where we're at this year, right? So the beginning of January, so January 2023 to now, you can see that if we're looking in the suburban markets from 6 months ago, which was January to now, Durham's actually up 10% this year. Halton's up 8, Peel's up 9, Toronto's up about 10, and York's up about 9. So we're between 8 to 10% up from the beginning of the year. So if you bought in, I don't know, we'll say December 21 to April of 22, maybe you might be a little bit behind where you'd purchase, depending on kind of where you are in the micro market. But if you purchase this year, you're probably still looking pretty good, even with some of the volatility that we've seen over the last couple months. So just to kind of put things into perspective, if I only showed you this, I would look like a bull. If I only showed you the other one, I'd look like a bear. So I like to look at both. So I'm pretty unbiased. It just is what it is.
So what kind of animal is that? Like a bear bull?
Yeah, I think so. Bull bear. Yeah, I like that. Bull bear. Yeah.
Well, let's
Why not, right?
Yeah.
Let's do it. So if we look at kind of where we're at for TREB, average home price, so this is composite. If we had to take all of the data and boil it down to one number, we're looking at average TREB home price across the Toronto Real Estate Board as 1.182. And so if we look back and kind of rewind the clock a little bit, that brings us to kind of between June and July of last year. So we're kind of right where we were at this point in time last year. Cool. And then, yeah. So if we talk about, this is kind of where I think things get a little bit more interesting, is talking about the, some more important kind of micro metrics. So months of inventory I've tracked for many, many months as well. And this is usually the way that this graph goes for any of the viewers out there is an indication of the strength of the market when it comes to kind of, buyer and seller balance. So the lower that this score is, the stronger the market is for sellers. Whoops, sorry. The stronger the market is for sellers, right? So this means that there's fewer months of inventory, meaning that inventory is getting chewed up off the market a little bit more quickly. And as we see that trend upwards, it means that inventory is staying on the market or piling up a little bit more. And so what you can see is, in our marketplace, the spring market, like I had mentioned before, we'll say, March to May, we had a lot of turnover. We were seeing a lot of bidding wars. From a marketing perspective, it was just more aggressive on the seller side of things. And we've, in the last couple of weeks, really seen that kind of lighten up as we head into the summer. And so I've noticed sellers changing their strategies a little bit more to offers anytime now, right? So bring in an offer, no bidding wars, just, the price that you see is kind of the price that you pay. And so it's important if you're someone who's looking at potentially selling and you've been thinking about it for 90 days, as most people do. This isn't usually a snap decision. And you think that the strategy needs to be the same as what it was when you were contemplating selling in March and going to market in the next couple of weeks. You may want to rethink your strategy just based on what's actually happening to make sure that you actually have some traction with your listing.
That's a really good point. Having a strong, realistic realtor that helps you price properly and anchor properly is so key. And I think in Toronto, from what I've seen, it reacts and adjusts faster than the rest of the province. The rest of the province is just slower to react to these metrics. They just they stay anchored to previous trends.
Yeah.
And so my question is, at what number, is it considered like a balanced trend, like 3+?
It's actually if we're looking at, the dictionary definition, we're probably about 4. In the Toronto market, as soon as we get kind of north of 2.5 months of inventory, that's when you start to see things kind of really level themselves out a little bit more. Like there's a distinctive difference between 1.5 months of inventory and 2.5 months of inventory from my experience and what I've felt and how I've seen things change. But to just kind of echo your point, this stuff is very critical for people to know. And I think a lot of agents don't even necessarily know how to assess this. But when you go to list a property, I kind of like to think of it, to give you an example, let's say like an iPhone launch, right? it's like they spend so much time prepping the thing and making sure the strategy is great and everything is good, because when they hit the market, they have one chance to make that massive bang and make sure that they sell out of those phones. Where if they had like kind of a crappy strategy and they didn't hype it up enough and they just kind of like let it go, and people, the phones weren't as in demand, people
A
be like, I don't
soft
really,
launch.
yeah, like I don't really know if I care about this phone, and then they're stuck with the inventory for a long period of time, and then what do? They would drop the price just to get rid of it so they don't have it sitting in the warehouse, right? And so I think it's really important that people understand, like, when you put your property on the market, a lot of people, and it makes sense if you, because you're doing this so infrequently, a lot of people think, well, let's just try at this price,
Let's
right?
try.
Yeah, let's try. And if we don't get it, we'll just drop the price. But they don't understand, like, what they're not taking into consideration is the human psychology behind this fresh thing that comes to market. And I'm the person that got it at a reasonable price. And there is this period of time after a property goes on the market where people are excited and it's fresh and they want to get in there and they want to see it. Like, there's a little bit of FOMO there that they may miss out on a good, all that stuff that if you price too high, you completely mitigate the excitement on the human psychology perspective, and it actually comes back to kind of bite you in the butt, because then your property's been sitting on the market for like 3-4 weeks, and then the opposite effect happens. You're like, what's wrong with this property? You're like, there's nothing wrong
Mm.
with it, we just wanted to get the highest price. And I'm like, you went for one strategy that came back to kind of bite you in the butt. And so there's a time and place for each strategy. What you have to do is look at the data to go, which one should we go with to make sure that we actually get the highest price in the shortest amount of time with the least amount of stress.
So what you're saying is the higher that this, metric goes, the tighter your pricing should be.
Typically, yeah, you really need to. Um, there's several variables that come into effect thereafter. Like, who are my competitors on the market? What deficiencies or setbacks do I have within my property? Am I on like a main road? Do I not have parking? All these things that we have to take into consideration in Toronto. But the higher that this number goes, the more you really need to think about your listing. Whereas with the lower the number is, the easier it probably is going to be to get rid of it, even if you have some setbacks, right? So it's just something to take into consideration. Like, higher the number, more intricate the strategy potentially, or like a little bit more research that you need to do and really need to think about it. If you're like, I just want to rush to get to market and put the property on the market and get the highest price, well, you probably would have been looking pretty good in April 25th to May 9th. You probably could have got it sold pretty quickly, with, I don't want to say little effort, but less effort than what it's going to take when the numbers are at 3.2 or 2.3.
Fascinating. I couldn't agree more. Like, real estate is more about psychology than about actual real estate.
It very much so is. Yeah, I appreciate that sentiment. I think that it's far too overlooked, and it's a very emotional process for a lot of people. Like, you know what I mean? We're, as investors, we're like, oh well, I'm going to try and take the emotion out of it. But even underlying the reasons why we're investing, like to take care of our family and do all this kind of stuff and make the right decision so our kids can have, wealth in the future. Like, there's a lot of emotion that is tied into several of the different strategies and factors when it comes to real estate. And I think, you also have to take that into consideration with the strategy that you implement, one way or the other. And most people say that they're going to remove, I'm logical and I'm going to make this decision based off logic, but it's really hard to make a decision off logic. So let's talk about sales to new listings so that people have an idea of, kind of how do we get to this number? Like, what are the things that, what are the pieces of the recipe to get this cake or this this meal here? And so we have the sales volume, which is the actual number of transactions that happen. Okay. And so what we actually saw, and you can see here, this is the last 20 years worth of data. So from May to June, it's pretty common. You can see the red on the right hand side here. It's pretty common to see the number of transactions go down. So there's just less trading happening ultimately. So we had 9,000 transactions happen in May, and we had 7,500 basically happen in June. So we had a 17% decline of trades that happened in the GTA. on trend. And then we also have on the flip side, so we have the trades that are happening, and then we also have how many new listings are coming to the market. Well, interestingly enough, other than COVID, which this number makes a lot of sense because
That's the anomaly.
June 2020 in comparison to March 2020 were very, very weird times for real estate. And so we saw a drastic increase in terms of number of new listings that came to the market. But other than if we removed COVID out of this, for the last 20 years or so, every single year from May until June, we saw a significant, typically decline in number of new listings that hit the market. This was the first year where we actually saw more inventory come to market from May until June. So we had, just over 15,000 and just shy of 16,000 new listings that hit the market. Just kind of thinking about this, my thought process is you probably had a lot of people last year who listed at this time that removed their property off the market, and they're thinking, oh, well, maybe this summer is kind of a better time to go to market. But when you see less sales happening and you see more listings hitting the market, we talk about supply and demand. This is showing that there's not as much demand because there's not as much sales or many sales, and then we have more listings, and so that is how this starts to kind of trend back up for months of inventory.
Wow.
Okay.
Man.
So just important to kind of look. And then if you look at the suburban markets, you can see 50% sales to new listings ratio in Halton, 43% for Peel, 48 in Toronto, 45 in York, and then 48 in Durham. So what does that actually mean though? If you compare your market, let's look at April. April was pretty hot this year. We had 72% sales to new listings. So new listings coming to market and selling, 72%. Well, look at how drastically we've dropped over the last couple of months. So if you're not taking this into consideration in your strategy as a buyer or a seller, I think you're really missing the mark. You can't use an April strategy looking at the numbers here when we've dropped by 22%.
That's a drastic change, and that talks about what we were talking about earlier about anchoring. If people are anchored to that April price, they're going to miss the market.
Yeah, I mean, if you actually look, I hadn't even thought about this before we started chatting, but we had February 60%, 67, 72, 65. Okay, June was actually the closest to January in terms of activity. So we were maybe a little hotter than January, but significantly less hot than February in terms of the sentiment or kind of the vibe of the marketplace for how properties are moving. So when people are like, how's the market? You can be like, it's January. It feels like January, but maybe a little bit hotter. Right. Okay. And so that hopefully that gives everybody a little bit of a scope of reference for just kind of like how things kind of feel out here right now. Now let's shift gears a little bit. This is taking kind of, again, like everything into consideration, but we'll kind of break down the condo market so people have an idea of what the heck is going on in the condo market. So like I mentioned before, we saw condo prices slide. I like to break down the specific condo areas in Toronto because if you're looking for Toronto condos, there's a pretty drastic difference between being here and being over here. And so if we're in the West End, we saw prices go down from 702 to 681. So again, 3%. If I just showed you that number and you had no context around what that actually meant, it might look big, it might look small. I don't know. It's kind of subjective. But what it means is about $20,000. Okay. Then we look at Toronto Central. We went from 838. Oh, where am I? 838 to about 830. In terms of price point. And then Toronto East, we went from 635 to 632. So not a massive drastic difference. But if we're looking at, what is the most affordable or how much money should I really be paying to get into each of these sub-markets in Toronto? CO1 is the west end of downtown and CO8 is the east end of downtown. And so you're looking between 775 to like 850, we'll say, to get in. And again, this is composite. And if we're looking in North York, you're looking between 750 and 825. So not a drastic difference right now between being downtown and being north of the city, which would be here to up here is CO7 and C14. And then if we look Scarborough Town Center, which I have preached on this channel a million times, is over here, but on the subway line, $625 to get into. And then Mimico, which is over here down near the water, you're looking at about 800 grand to get into. So depending on where you're looking, or depending on your price point, this should give you a pretty clear idea of where you may potentially want to start, depending on what's important to you. What amenities in the neighborhood? Do you want to be close to the water? Do you need to be close to the subway? Do you need to be right downtown? Do you need parking, etc.? So hopefully that gives a pretty clear indication. If you're a condo buyer, you can just send me a message. Send me a message on Instagram, probably the easiest way. And I can send you, or you can just screenshot this, whatever you want to do. I can send you this map, but this will give you a good breakdown of, where you might be looking for condos, and the associated price point with each.
Beautiful.
Yeah. And then we'll talk a little bit about rental market changes, and then we'll kind of cap it off here with what are we expecting to see when I'm back here next month. So rental market, what I've seen is the data is showing that prices haven't really changed that much. We were at this is for a 1 bedroom plus den, $2,900 basically. We're within, $13 of each other. But what I've seen specifically within the leasing agents on my team is the strategy for tenants being more aggressive. So instead of offering 2 months deposit, trying for 4, they don't get 4, they go for like a whole, year up front. So instead of offering more money, people are trying to pull the other levers outside of money to see if they're able to lock in a new rental property. But I've definitely seen quite a bit of competition, is what I would say, when it comes to the leasing side of things, specifically for our our investor clients, and then more prevalently for our leasing agents who are helping tenants actually find new homes.
Yeah, 12 months up front in rent is not uncommon.
Yeah, I mean, it's if you've got it and you don't have to pay another $200 or $300 a month. I've also seen people do that, right, where you get into the bidding war on the rental side of things, and I think that
it's very real.
People are trying to mitigate having to spend any more money. I mean, $2,400 to $3,600 a year just to get the place versus just giving the cash up front. Probably worth the savings. I mean, if you looked at it from an investment standpoint, it's probably a pretty, it's a decent chunk of change, $200 to $300 a month just to get something locked in. So different strategies that people are using to not necessarily have to overpay for their rental property. And then we'll cap it off with kind of like what we expect. So again, looking at the last 20 years, anything that's highlighted in yellow was the kind of peak pricing for the spring summer months. And so historically what we see is May, right? May, and then prices tend to drop and slide a little bit until August. What I thought was interesting was I actually went back through and I looked from August of the previous year to May of the following year. If you look, even if you want to get a deal, right? So this is going to be relevant information for people who are maybe in the marketplace right now. August is a great, if you find something in August, you're probably getting a better deal than what you would have paid for in May. But oftentimes people think, well, I'm just going to keep waiting if prices are going down and I'll buy next year. But the data actually shows that this, 03 May is more expensive than, 02 August. And I went through that year over year. I didn't find one that, didn't follow that pattern. So it's just interesting to see if you actually follow this trend upwards. Like, there's a million things that you can do to overanalyze and try and time the market. What I would tell you is if you want to time the market in 2023 and you're actively looking, you're probably looking pretty good in July or August. We'll probably see a little bit of a bump in the fall as we typically do, and then things will die down a little bit in the winter, but you just won't have as many homes to choose from. And so that's why I kind of prefaced this video today by saying if you want the highest selection of homes, that's actually probably behind you. And if you want the cheapest price, that might be ahead of you.
That's another gold nugget right there for any potential shoppers out there sitting on the sidelines waiting.
Yeah. I mean, Listen, everybody wants the best deal. Everyone wants the most expensive thing for the cheapest price. So what I would tell you is if all of your stars align and you find your dream house and you find it in August, the numbers show that like you're probably looking at getting a pretty decent deal on it. So just something to kind of take into consideration, hopefully a little hack for you guys to save a couple bucks. And then the other thing that we, if we look at, which is interesting, from May and June to July and August, if we look at home prices over the last 20 years, only in 2020 did the prices actually increase. And so if we take an amalgamated number, an average over the last 20 years, there was a price decline of an average of 6.5% between May and June and July and August. So again, that just kind of echoes the point that we were saying before. Like if you've been kind of dipping your toe in the market and you're thinking about making a move and you want to get the best price, you should probably just look in August. If you find something that you like, it's probably not not a bad deal. And then, but to echo my sentiment, because I know that I had said that listings had increased, but what we often see is the most inventory in May, and then like it tends to drop off pretty significantly from the high, which is usually May, to the low. You're looking at 18,000 new listings to 10,000. So that just kind of goes to what I was saying before is don't expect, if you're waiting and you're like, I'm just going to wait in August for more inventory to pop up in a better house, probably not going to happen. Beggars can't be choosers is not a good saying in real estate, but the sentiment of that saying is ultimately the summer. It's like if you're waiting for more inventory to pop up, it's probably not going to happen. But if the right thing pops up and you get it at an August price, it's kind of like all the stars aligning for you. And then the same thing. This is more for real estate agents. If real estate agents are watching this and you're trying to plan your business, you should understand that there are less or fewer transactions that tend to happen from spring market, obviously going into the summer. So you should plan your prospecting and you should plan your business planning in accordance with that to make sure that you're not beating yourself up too hard. If you're wondering why things are a little bit harder in the summer, there's this less of a pie to kind of attack there. So if anybody wants to get in contact with me, those are my contact details, and would be happy to kind of chat with you or have a discovery call about how we maybe could set you up on a plan of action. Even if you're not quite ready to go yet, we're happy to have a conversation.
And I really love these numbers, and you reminded me a lot about my high school time. I won't say when I graduated, but I'll just say that
it was only last year, right?
It was 2 years ago.
Okay, and, perfect.
I actually paint these gray hairs. I failed grade 10, grade 11 math, and I had to go to summer school. And grade 12, I actually got 50% like by myself. So she's like, I'm going to give you 51 to show that you actually did it on your own. I sucked at math. And now that I'm, old and gray, I love the trends. I love the math. I love the statistics because it's just so, it's as close to a crystal ball as we're going to get. And maybe I'm just saying that just in case someone's watching that's like having a tough time with math or something. But I really love these numbers, man. The numbers are the numbers, and the numbers are usually what's going to set us free.
Yeah,
so we live and die by them, right?
Yeah, no, totally. I appreciate that. And I think, how we had chatted earlier about people saying that they like to make logical decisions. I think that most people genuinely do want to make a logical decision. And so it's pattern recognition is one of the things that can help us really see ahead into the future. Like it's like we don't have a crystal ball, but it's the thing to help us kind of make easier decisions and mitigate some of our risk or increase the probabilities, because you're like, all right, well, there was 1 out of 20, 1 out of 20% or 1 out of 20 chance that this is going to happen in the last 20 years. Is it going to happen again this year? It could. But for 19 of the 20 years, it didn't happen. Right. So all I can tell you is what has happened in the past and kind of my gut feeling and what I'm seeing, or what I feel could happen coming ahead. So it's just, it's something where it's worth investing a little bit of time into it. That's why I'm on this channel. I invest tons of time to make sure that people are educated on it. But like, you don't even have to be overwhelmed with everything that I taught today. Just pick the one data point that actually resonates with you, and don't overwhelm yourself too much, but make your decision with a little bit of data so you have some pattern recognition of how things typically go. And I think you can mitigate a world of hurt by just knowing that stuff.
And if you have a hard time choosing which ones to choose, call Emma and her
There,
team,
there you go.
and they'll help you choose the one that you should focus on. You don't have to guess. Well,
Yeah.
educated guesses.
Yeah, we're here to help. I mean, the cool thing is with real estate, on the buy side of things, you're technically paying us, but the seller's paying us, right? So the one thing that I think is very interesting, I tell people, I'm like, you can work with any agent that you want on the buy side, and
Yeah.
it probably costs you the same, which is, we work for 2.5%. So does almost every other agent in Toronto. And so you can choose who you want to work with. If we resonate with you, great. If we don't, that's cool too. But you should find somebody that you trust, that you want to work with, that you have the confidence is going to be able to help you. Because even if you're a first time buyer and you don't have a ton of money, you still have a very even playing field for selecting your representation, where it can be slightly different on the sell side of things, but on the buy side of things, there's no reason why you should be working with someone that doesn't know what they're doing, because it's a complete level playing field. Interview a bunch of agents, make sure that you feel confident in them, make sure that you resonate with them, that you would enjoy working with them. It's not going to be a torturous process, but it doesn't cost you anything more to go and do those interviews and make sure that you're protected in that capacity.
Amazing closing thoughts.
Yeah,
Excellent.
well, I appreciate you being the host today. You were great.
You're great too, man. You knocked it out of the park.
Thanks.
I can't wait to see, you back on the channel, and then we could debrief on what the summers look like, and then plan for the fall and the winter. So
Definitely.
I think some juicy stuff's coming down the pipe in the fall and the winter. I don't know. Just a hunch.
Just a little bit of a hunch. Yeah, I think you guys are going to have to check out the videos in the fall and the winter. Come back to the channel.
That's it. Okay, Emma. So thanks again. Great job. Thanks for accumulating all that information and presenting it in a way that's just really simple to digest, I would say, and keeping it fun, right? I'm a
Yeah,
big
thanks.
fan of fun. It's got to be fun. And every time you come on the channel, you bring value. So thanks again. My name's Luis. I'm a real estate investor and coach. Emma, she's a real estate a realtor in Toronto with a really extensive team. Reach out to her on Instagram, and we'll catch you on the next video. Thanks.